We're going to go right out to the CBOE now for the morning trade. Scott Bauer, CEO of Prosper Trading Academy. I have to tell you, we just heard some of the fundamentals from Michael. I know that he gave some whisper numbers that certainly sounded like a big range, and people are expecting this one to really have a big move after the earnings. Yeah. How are you going to trade it?
Yeah, no doubt about it, Nicole. You know, the market maker move is about $4.50 or somewhere in that range. So yeah, it's a pretty big move. But I think what's going to be more important is obviously the guidance and what they talk about with the tariff impact and how that's going to affect the stock. So I am, let's call it, mildly bullish. Okay, it's hard to fight the trend here, but again, it's all going to be about their guidance. So what I'm looking to do from the option side is really take advantage of the serious implied vol, the really, really expensive implied vol premium that's in this week's options. So what I'm doing is I'm going to actually put on a calendar or a time spread, selling this week's 52.5 call, and I'm going out all the way to regular October expiration. So it's about 3 weeks out from now, buying that 52.5 week call. I can do that for somewhere around 60, 65 cents, something like that. And the reason I like that is 52.5, yes, that would be, new highs, but that's about the upper end of what that market maker expected move is. So on a move to the upside, it takes us right to that short strike. But I really, like I said, want to take advantage of all of this excess premium in this week's options, and going out that far, 3 weeks, and in my world, 3 weeks is far. That gives me a lot of time to potentially roll the position, manipulate it, trade out of it. So I think it's a really cheap upside play from a calendar call spread type of play here with Micron. And listen, the bottom line is, if the numbers aren't good or if guidance is weak and they talk about China and it's negative and the stock goes down, I'm limited in my risk here, which is the best part about this trade.
Right, and you picked this 3 weeks. It's pretty interesting. When you were thinking about the trade, did you have a second idea in your mind before you decided on the 3 weeks?
I did. My other idea to take advantage of the expensive premium this week was to actually sell an iron condor. Now, an iron condor, it sounds, really fancy, but all it is selling a call spread and selling a put spread at the same time. So you look to see if the stock stays within an expected range. So based on what that market maker expected move was, I was looking to possibly sell the 46.44 put spread of this week, and then the 51.53 call spread. I could do that for almost $1. Okay, again, my risk is limited because even if we get an outsized move, a really big move in one direction or the other, the most this could be worth is $2. But this is a type of trade looking for a range-bound type of move where I get to take advantage of the very, very expensive premium. But you know what? I looked at it and I looked at the reward to risk on it, and I like that upside calendar call spread a bit better than I do on the iron condor.
All right, great to see you. Scott Bauer, that was excellent, CEO of Prosper Trading Academy. Thank you. Up next.